Welcome to R.E.C.A.P, the podcast on crypto assets and real estate, jointly produced by Fibre and R.E.C.A.P. I'm Stefan Lösch, CEO of R.E.C.A.P, and today our guest is Oliver Siah, founder and group managing director of Fraxtor. And today we'll discuss the structuring of real estate investment products and more generally the structure of the firms that need to that issue those products. Welcome.
Hi, hello.
Oliver, thanks for joining here. So first question, just sort of that people understand where you're going. So Fraxtor, what is your product? Is it lending, investment? What kind of objects? What kind of ticket sizes? Those things.
Okay, so Fraxtor is a real estate tokenization platform. So what that means is that we tokenize real estate, and in terms of the capital stack, this can refer to debenture, like a debt. So it's sort of lending, or it could be sort of equity. So that is more like a private equity type of investment. In terms of the product range, currently most of our projects are real estate development projects, and these are based in Singapore mostly, Australia, the United Kingdom, and also Canada. So we have really a wide range of geographical location for our development projects. And yeah, I think that's sort of our current product right now.
And so ticket size, any target ticket size on those deals?
So I mean, we try to democratize real estate investment. So our ticket size are very, I guess, manageable. It's currently at 20,000 Singapore dollars. It's equivalent to about, I mean, US probably about $15,000. And I guess that will go down as our user base goes up.
And on the project side?
Oh, on the project side, I mean, we have fundraised. I think the biggest fundraise we did was 17 million. That was sometime last year. At the start of the year, we raised 11 million in March. And as of today, we are doing a current funding round of about 5.5 million Singapore dollars. So that's happening actually this week.
Okay, so double-digit million in Singapore dollar at the moment is kind of the target range, but sometimes also a bit lower, yeah?
Yeah, so we try to, I mean, we're quite diversified in terms of the type of real estate products that we bring on. So it could be an entire condominium or apartment block type of development project, or it could be a single townhouse project. So we are quite diverse in terms of what kind of projects we bring on.
And so you're using this via a DLT platform. What is the advantage of this over a traditional, well, I'm saying traditional, but a crowdfunding platform?
I guess firstly is basically the digitization of the real estate investment business. So what we envisaged was you know, instead of signing a lot of documents, you know, you're now coming onto a platform that is online where you can make an investment anywhere in the world. We went on DLT because we saw the potential of it being able to integrate with other platforms around the world, especially if you're on the same public network. This allows better integration in terms of funding. So what Fraxtor is trying to do is that we're trying to open another subsidiary in Australia, and what we intend to do is to provide sort of an exchange where we're able to trade our security tokens globally. So people in Australia are able to trade with people in Singapore, and people in Singapore are able to trade in Australia. Next step is definitely Europe. So that is basically just expanding that ecosystem where we're able to create liquidity and enhance liquidity for real estate deals. So that's the reason why we have moved to the DLT platform. It allows us to do things mostly autonomously without relying on another intermediary. So everything is being governed by smart contracts, and each trade is basically governed by the computer codes, right? So you don't really need somebody in place to do that matching of trades per se.
Okay, interesting. So essentially what I'm hearing is that it's a secondary market. So the advantage that you see is that there is a bit of a secondary market and easier
Yes,
investor access once
that
you
is
do it
exactly
on
right. Yeah.
blockchain. So the crowdfunding would already deal with all this documentation stuff because this already
Yes.
crowdfunding Blackboards can do. But sort of the next step is cross-border and invest and secondary market liquidity.
Yes, exactly that. If you look at the way the security markets are in the world, right, it's always geographical. An exchange in Australia will only have participants in Australia, an exchange in Singapore will only have participants in Singapore, and an exchange in the US will always have participants only in the US. Even for foreigners, when we invest in the US market, it's through an intermediary platform. You are actually holding American depository receipts. You're not actually holding the actual security that you're buying. So you're basically buying a US stock on somebody's actually holding it on your behalf. So that is not the type of ecosystem that we want to build. What we want to build is that the tokens are securities which you can hold anywhere in the world as long as you have a wallet that you're able to store the tokens in.
And we discussed a bit in the preparation about decentralized versus centralized structures. And you said, so at the moment you're still pretty much a centralized company, and this is partially because of regulations, but you're having a certain vision of moving to some hybrid decentralized structure, and the hybrid being driven by regulation. Can you talk us a little bit through?
Yeah, so I think currently like most regulated platforms in Singapore at least, we are all sort of centralized. What that means is that the regulator expects us to do KYC, AML screening on all investors, and we are supposed to whitelist client addresses, and after that particular KYC process, and only those whitelisted addresses are able to interact with our blockchain. And so that I still think it's still a very centralized way of utilizing the blockchain in a sense. I do not think that we will go full decentralized. I think a full decentralized model will be quite scary, especially for the regulator. So what we thought of is we are trying a hybrid model like what I mentioned. So that would incorporate certain DeFi aspects into our current business model. And yeah, so I do not have any big concrete plans to talk about right now regarding this, but it's definitely one area that we'll be heavily trying to explore.
Okay, and then so in terms of deal structure, so we sort of covered company structure, which is at the moment still a relatively traditional one, partially because of regulations, but with an idea to move on to something more decentralized if and when the time is right, and depending also on the regulatory context. Then maybe talking about specific deals and how they were structured. You did an interesting deal last year.
So let's talk about the biggest deal that we did last year. So last year we raised $17 million on this was for a landed sort of a landed development project. So basically we bought one plot of land and we subdivided it into multiple plots for redevelopment, and we raised 17 million. Roughly we were sort of oversubscribed, so we fully subscribed the entire amount within 90 minutes. So within 1.5 hours, it was totally taken up. So that particular deal was an equity deal. I would not say we get such success for every single project that we do. It just so happens that this site was more desirable. We went in at a better entry price, and therefore we garnered a lot of interest for the deal. Yeah.
And if this was an equity deal, was it an all equity deal or was there also leverage attached to it?
Oh, definitely leverage. We all our products are leveraged products. So we have to take financing. I think that is really the way how we invest in real estate over in Singapore. So mostly we leverage uh, all the property deals that we do.
Mm-hmm.
And that really makes sense from an investor point of view, because when you leverage, you're able to increase shareholder returns. And at that point of time, the last 2 years when we were doing this, the interest rates were very low. And so it only makes sense to leverage.
And the structure, how does it work then? Does the deal go into a special purpose company and this company has literally issues equity and the equity is then associated
Yes.
with the token? So how do
Yeah.
does your structure work?
That's exactly right. So we have structured it as an equity deal. So basically what each token represent is the share within that particular company that we have formed. And so, you know, at the end of the development, you know, when we sold everything off, we're going to return everything back to the investors, less all the fees that we take.
And the company, is this a Singapore company or is this is this domicile?
Oh, yeah, this is a Singapore company. In Singapore, the corporate tax rates are very low, so we definitely use a Singapore company for this.
Okay, and in terms of the so but still there's a certain tax drag on these kind of structures when you have distributions, because you say sort of it's an normally
Yeah.
companies are designed to be like there forever, but this one isn't, right? This is kind of a limited
Yes.
time company that essentially pays itself, either redeems at the end. What does it do? Does it buy its shares back? Does it pay
Yes.
dividend? What's the plan at the end?
So we do a redemption of the tokens, and that will return the funds back to the investors.
So but this is structured then as a dividend or is structured as a buyback?
Okay, so in Singapore, it's a lot more friendly to do this, because in Singapore there's no capital gains tax. There is no additional tax on. So the taxation only happens at the entity that's holding the property. So after that, when the funds are being repatriated back to the investors, they are all tax free.
Okay.
Yeah, so it's a more friendly tax structure. In Singapore, there's no capital gains tax, so you do not pay capital gains on the increase in value of your security tokens. You do not pay income tax on the dividends that you earn. So it's a very simple structure over here that in Singapore.
Except that obviously that is a little bit that assumes that your investor is an Singaporean tax resident and not another tax resident, and then you
unfortunately that is correct.
So under corporate law, you probably still have some issues if you, because it is a share, then this is an equity instrument, a foreign equity instrument, and it's subject to whatever taxation in the country where you're tax
exactly
resident.
right.
So then that's
yeah, so I mean we there are two things certain in life, right? Death and taxes. So tax is something we definitely cannot avoid. So definitely a lot of tax planning is required to make sure that we get the most tax efficient structure for whatever project that we are doing. Yeah, so we spend a lot more effort on making sure that the structure is correct.
And so what is your investor base like generally? Where are they located? How do they find you?
Okay, so we started off 3 years ago. We started off 3 years ago raising money, tokenizing and raising money 3 years ago. And during back in those days, you know, we were not raising double-digit million. We were raising like low single-digit millions, and those mostly were taken up by friends and family. And as we progressed over time, through word of mouth, we actually gained a larger investor base. And so for subsequent projects, we definitely have a lot more non-friends and families coming in. So that is a time where we realized that we're gaining traction. So we sort of started like a marketing campaign, where we started to educate the general population of the benefits of investing in real estate in a tokenized form. So that is the extent of our marketing campaign, and then we try to engage investors more. The investors are actually a wide range of people. I mean, wide. When I say wide, means they can be young, very young, in their late 20s, all the way up to the early 80s. I think the oldest one we have is early 80s, and so it is. And yeah, and some of them are tech savvy, and some of them are not tech savvy. So the non-tech savvy clients usually they usually depend on another family member who is more tech savvy. But what we realized was that people were more interested in the deals that we had rather than the platform. So they actually saw through the platform and just looked directly at the deals. If the deals make sense to them, then they will invest their money in it.
Okay.
Yeah.
And so at the moment, it's still mostly Singaporean investor base, I guess?
We have Singapore and Australian investor base.
Australian also, okay?
Yes.
Okay, and have you seen any secondary liquidity moving from Singapore to Australia or vice versa?
Oh, no, currently we don't. Yeah.
Okay.
Yeah.
Okay, cool. Oliver, thank you very much. I think we're already at the end. This was a great discussion. It was very interesting, and looking forward to seeing how these things develop.
Thank you so much.